Okay. Where's my chat? What's this? We don't want this. All right. Hello and welcome to Camel Finance. I'm your boy Camel, and we should be live. So, if you can hear me, I would appreciate it if you could let me know. Just looking for some comments. I'm also waiting for Kemo. I was a little bit trigger happy, but you guys have been here long enough, so I felt like I should at least go live, and then Kemo can pop in as and when he's ready. Can you hear me? Yeah, it sounds like you can hear me, right? I just saw a comment. That 1 kilo silver coin looked awesome. Yeah, it was really good. And Cobra got me a really, really cheap deal on it. I paid like £400 under the normal price. So yeah, I was very blessed to get such a good deal. You hear me? Okay, thank you for confirming. That's brilliant. Let me move this sucker up a bit. Okay. I don't know where Kemo is. I think I just heard a Discord thing though. So let's take a look. See if that was him. Start setting up. I'm 10 minutes. Okay. Okay, I'm live now. Call me when you're ready. Okay. So yeah, we'll just hang out. If you've got something to ask away, of course. And hopefully I can answer it. If not, thank you for being here. Please hit that like button. If you're not subscribed, hit subscribe as well. And we'll see what we can do. Hear me hitting the crack pipe. Not yet. No crack before 9. That's the rule in this house. The wife doesn't like it. Mic check. Yeah, everything looks good. Are we going to hell? I don't know. I mean, I guess I can waffle for a bit whilst we wait for Kemo to get here. Kemo's going to be about 10 minutes. Thank you for all the nice words. It's not cork popping time, although historically, yeah, we don't need any cork popping now. I can summarize my thoughts on the market as follows. Okay, I think that if we don't, I'm sure me and Kemo will get into this in a bit, but if we don't see a cold CPI print and a rip in the markets out of CPI this week, coming next week, then I think I'm going to be pretty close to calling tops, to be honest. I think I'm going to be calling tops. So yeah, I mean, there's always a chance, right? There's a chance CPI comes in lower. That's what my analysis shows should happen. If that's the case and markets respond positively, then I have no problem getting long and riding that thing until it decides to break down. And hopefully we'll still be looking for third angles. But I mean, the markets are just not really looking like blow off tops right now. And as much as I'd like to say, for example, let's have a look at this, right? What's this weird indicator? Yeah, like as much as we've got this situation going on, and I would love to say this is what comes next, right? I can't control what the market's going to do. I can only have an expectation. And if that really is, that was our second angle, we chopped it, then it was like, maybe we'll recover it. Okay, we did, but then we broke down again. So of course we can move into CPI and then come screaming out of here in a third angle and happy days, right? Overall, 3 angles when you zoom out, sell the top one, sell the third one on a breakdown. So hopefully that's the case. But if we get to CPI and this thing continues to roll over, then I don't know. How do we call this a blow off top? Best case scenario, we can be talking about maybe finding a weekly cycle low somewhere in here and then looking for resumption. But then I'm completely wrong about the blow off top. I'm completely wrong about the timing of the top if that's the case. And of course I could be wrong, right? I could be wrong. There's nothing wrong with being wrong in trading. You're going to get things wrong. It's just about staying on the right side. But I hope you can appreciate, as much as I want CPI and a rip, if we don't do that, then how can anyone possibly be calling for a blow-off top? And when I look around Twitter at the moment, all I see is the blow-off top gang. David Hunter, for example, or Henrik Zerberg, or Iced Trader. All of these people are just here going, blow-off tops coming, dips of a buy-in, and maybe they're right, okay? But that level of conviction, I don't understand how we look at this chart and say this looks like a third angle's coming, right? Where's the third angle? If anything, it looks like we're breaking down of the second angle. So again, we could certainly see CPI and rip. And if we do, fine. No problem with that. But if we see any kind of lackluster price action out of here, then does this look like a blow off top when we zoom out? No, it looks like it's already happened. So that's my thoughts, right? That's my thoughts. Are we dead yet? I don't know. But I mean, my job, remember, is to just have an expectation and stick with it until it's invalidated. And if what happens is this yellow squiggle here, then what do I say? It's not invalidated? You see what I mean? Like I have to call tops here. I have to say that at least the blow off top is not happening. And sure, there's a million other scenarios, because maybe we do this and then we just base around here. And then Raoul Paul was right, up only till next year. Maybe that's the case. Maybe we get a double pump. Okay, weekly cycle, scream off to new all-time highs. Maybe that's possible as well. And if something like this is going to occur, then what we'll see is an outright return to Fed balance sheet expansion and QE. So maybe if we get down here and the Fed says, we're spooling up the printers, we're going to print 20 trillion and we're going to just buy everything and add it to the balance sheet, then fine. Okay, but that's actually the easiest possible trade ever. As soon as they announce QE and outright balance sheet expansion, you just buy all Bitcoin and stocks and tech stocks and everything goes up, right? That's exactly what happened right here out of the C19 plunge. But is that going to happen this time? You know, nobody knows, right? Nobody knows. So as ever, we'll take it one day at a time, and hopefully CPI is lower. If CPI is lower, hopefully the market responds. And if the market responds, then we could probably still be talking about third angles here. Maybe. But right now, hard to look at this and say this looks exactly like a blow off top should look. Left translated likely in the bin, but again, don't discount it, right? Don't get me wrong, it seems less likely now than it has for a long time. But, oh, that's the wrong chart. I got a blank one somewhere. Yeah, you know, something like this. I think, is that a log one that it fits? That would still be more or less left translated, right? Especially if it, you know, shrinks down a bit. So we definitely can't discount that. I'm not saying it will happen, but I'm just saying it seems unlikely. Kemo, hello, how you going?
Mic check.
Mic check, you good?
Good.
Excellent.
Screen here.
Yeah, I'll let you share the screen. Can somebody in the comments confirm they can hear Kemo, please?
Mic check again. Mic check again.
I mean, I hear you loud and clear. Hopefully those guys do as well.
Does it sound better than usual? Does it still sound crappy?
It's not the best. I'm not going to lie, it's not the best. I think it sounds better than the very first one we ever did. Did you get a mic or something? Everyone's saying they can hear you fine, so yeah, happy days.
I've been playing around with this new microphone. I do have a lot of noise in the background, which I'm going to get rid of right now.
Wait, it sounded really good at first, and then it went really thin.
Wow, I'm working on it. All right, I'm back. Now I'm blasting air conditioning on me. Turn it down so that muffles. And hopefully we're good.
Yeah, I think that's cool. Let me full screen this.
That's cool enough. Excellent video this morning that I got to wake up to that you made.
Oh, thank you.
Great. Let's go with S&P because you were talking about the S&P and blow off tops. Let's just go right into it. SPX.
Wait, one sec, Kemo. How do I do that thing where you make your screen big?
It's on you, bro.
Is it? Wait. Oh yeah, I figured it. Wait. I got it. Almost. Somewhere in here. There we go. Let's try that. Okay, that looks all right to me. Happy days.
Look at that coming down today. Where's my Friday VIX crush?
I know. I was wondering this myself.
Oh. Well, it's technically still made a higher high. Last week, if you look really closely.
Oh,
you
closing
did close.
Basis. Yep.
Slightly higher. So still in an uptrend until you close below 51.47 on a weekly basis. So not time to panic just yet. If it does start going down, we got a long way to go.
Yep.
But you already know what I'm looking at on this. Let me take a screenshot. Price action there, and we'll draw on this thing. Looking at that mixed with that, continue with that, matches that. In my opinion, we're almost done. So your idea that you were talking about today, that maybe there is no blow off top, that could come to pass. And look at this candle down right there. Look, it's mimicking that pretty well. So to complete the pattern, I mean, you're talking one more little pop. This is like an ABC. So you make ABC. I had 5,700 on that. So that'll complete the pattern. And I know that you don't like necessarily trade with targets in mind. You want technical breakdowns and stuff like that.
Yeah.
But this is where your and my methods can align, where my target is just above here. That doesn't mean that's the top, but if you get to that target, that's where you want to look for a reaction, you know? So then you would have a technical breakdown from the target, and then you'd have more confidence that that would be a top. Are you still there, CPM?
Yeah, I'm still here, bro. I'm still here. I was saying just before you got in that for me, we should be, from my perspective at least, once we get to the CPI, I think it should be lower, and I think markets should respond favorably. And I was saying, if that's the case, then we can still maybe be entertaining another high, maybe even a blow off top and third angle, maybe even see Bitcoin challenge its highs and potentially even break out on some kind of craziness. But I was just saying, if that doesn't happen, if we get there and either the print's hot or the market reacts negatively to it, then I said I'm just about ready to call tops here until proven otherwise.
Yeah.
So it's interesting.
Given the economic data, we're right on that cliff of a potential trade setup to the downside.
Yep.
So I think it's warranted to be very cautious here and look for technical breakdowns, or have your stops very tight.
Yep. Something else I've been noticing as well is I have paid way more stop losses than is typical for me over the past, let's say, 4 weeks. And that speaks to, since I only trade breakouts or cycle lows, that speaks to daily cycle low failures and failed breakouts, which inherently are bearish, meaning it's quite possible that we are likely going to see a trend change, unless, of course, the next set of trades starts to work out really well. If it does, if we break out from the CPI and breakouts start working and cycle lows start trading profitably again, then happy days, right? We're still in a primary uptrend. But all of my experience has told me once I start to hit stop loss, I always think to myself, whoa, okay, like we've got a trend change, time to be looking for shorts.
Yeah, so that's kind of what this is speaking to right in the center here, similar to what you're talking about. If you zoom into this trend line right here, you broke out and then failed it.
Yep.
So that's a liquidity. That's the trend lines are also liquidity. It's not just tops and bottoms where the stop losses are. Those are stop losses right there at the break. So yeah, what you're saying there, where it's inherently bearish, that it's breaking out and then coming down, it's not looking as good as it did before. It's not as favorable. In a bull market, your buy setups do very well. Yep. In a bear market, your sell setups do really well. They overperform.
Yeah.
So it's definitely the performance of the market is in that direction. And we can probably take a stop loss from that leg down there if we're going to mimic that and have an invalidation to measure that. Invasive extension, I keep these, I'm in the log scale, and I'm just going to measure that candle down. Measure the entire thing, project from the high. So yeah, your stop loss needs to be right, for me anyway, the way I trade it. Your stop loss needs to be at 51.92. And look at this, the 1-to-1 to the 1,272 for a buy, for a potential scream higher. For one more high. When you're double top in there, there's liquidity up there.
Yep.
So if we are at the top of a market, then those there's stop losses up there, which turn into instant buys. So like immediately they buy at market.
Yep.
So if a market maker requires liquidity, they'll bring it down, pop up there, sell into those stop losses, and immediately reverse it. So if you do see price get up there, reject hard, that's looking really toppy, and you may see this leg repeat here at minimum, or we're going to start something totally different.
Yeah.
So the patterns that I trade like that as soon as this pattern completes, what comes after it, I don't know. But I do feel that this pattern is coming to completion. And the top target, let's measure that from the low. Measure this first leg up and project from that low. Yeah, 59.97 would be the maximum target for that, I think. Conservatively, we go on closes and gets me up to my 57-ish, 5,800.
Yep.
Which would look like an ABC. Let's zoom into this and just see if we get a one-to-one. Look at this be an ABC up or something like that. Take this, measure this leg, go into the buy setup potential, and the one-to-one gets you right at 58. So this could be an ABC up, lock in some profits there. If price comes down, good. If it breaks out again after grabbing that upper liquidity, then it's off to the races. Then I could entertain a blow off top, I think.
Yeah.
Would you see it the same way? Does that make sense?
Yeah, more or less. The other thing I'm looking at, obviously, as a cycle trader, is we are currently on something like day 23. So I don't trade the 4-hour cycles, but I know that Andrew and Elosky do. And they're both pointing at 4-hour cycle failure here. So if that's true, then that means that the high for this daily cycle is already in. And that also means there might be another weekly cycle low ahead of us. So it really, I say it's now or never quite a lot, and people get quite annoyed. They're like, it's been now or never for Bitcoin for 5 months, but they don't seem to realize I'm talking about the price levels, right? Holding or not holding. I'm not necessarily talking about like now or never in terms of it has to happen today or it's not going to. But it does feel like we're at a now or never kind of level on the chart, because if this thing doesn't rip out of here, then objectively speaking, we probably have seen a left translated daily cycle, and there's probably a weekly cycle low to come.
Yeah.
But the other thing is, like you said, all that liquidity which is on top of the double top, right? If we did just pop up and take that and then roll over rather than having a blow off top, then we would start to look an awful lot like distribution as well, right?
Oh, heck yeah. Yeah, for sure.
So,
all right. So we've got like a downtrend here. This is your last lower high, and now you're this much higher. So my empty space theory idea would say, hey, you're going to entertain a higher low right here. If that fails, then your stop loss is down here. And we're coming back to this area, maybe pop it a little bit and then reverse next week on CPI, and then one more high. That looks really good to me for a buy setup, honestly.
Yeah, that's really what I'm looking for. Hello?
Hello.
Yeah, that's what I'm hoping for.
Oh my God. Cool. We can have hopes and dreams. The market doesn't care.
No, that's absolutely right.
This is the way distribution looks generally. Right up top there, that's a 4-hour distribution. And you could draw a box around that. It's pretty. And you're staying below it. So this could just bounce and retest that and roll over again and just grab that inner liquidity. But yeah, CPI print getting lower. I think people would anticipate, oh, they're going to do, cut rates 50, 75 basis points or whatever, and you can get some exuberance out of the market. And that's really all it is. The market makers and the banks, they're playing with people's emotions, and they're going to use whatever news they can to get people excited and be like, oh, it's up only now. Liquidity's here. Here comes liquidity. It's up only till the end of the year. And yeah, maybe not. Oh, you know what? When did this rally start? This is a 4-hour chart. October 14th, the 13th of October. Wouldn't that be interesting if we're topping around the 13th of October? So it gives you a bull market for 2 years, like on the dot.
Yep. That'd be weird.
Does that work with cycles?
The 4-year cycle's already slightly late. So we had the C19 in 2020, March of 2020, and then we had a half cycle low for in 2022. And so we're roughly due. A perfect 4-year cycle would have been a few months back. So we're running a little bit behind schedule, which also makes me think this next upcoming drop is going to be quite sharp, because that's typically what we see when the cycle gets stretched.
Yeah. Yeah, you did that a couple weeks ago when you talked about the C19 plunge. You're
Yeah.
like, this, like cycle traders knew something like this was coming because of how late you were in the cycles.
Yeah.
So something similar makes sense, and the
And
patterns kind of make sense.
yeah, it speaks to there not being much upside left, at least in terms of time, followed by a very quick plunge to the downside. I do even wonder, particularly as we haven't seen the third angle yet, and it's not really looking blow off toppy, that maybe we get to FOMC and the Fed does something insane, like say we're not gonna cut right after the bond market has
Yeah.
really tried to force its hand. And if something like that happens,
This week as well.
say it again.
I've had that same thought. It's like maybe it's going to do something stupid,
Yeah, but
just to really mess with people.
have you seen
That makes sense.
Trump is also going to be sentenced or something on that day, or the day before?
Who's being sentenced?
Trump.
Oh, Donald Trump. September 18th, he goes into sentencing, I do believe.
Yeah, and then there's another thing going on that day as well, which I forget. Oh, the VIX thing, the VIX expiry, or whatever they call it, where there's no longer going to be a mandate to suppress volatility.
Ooh.
All on the 18th.
Yeah. 18th is on a Friday?
Wednesday.
It's on Wednesday?
Yeah.
All right. Well, 2 days later would be the 20th. That would be options expiry. It would be like a triple witching, maybe?
Yeah, something like that.
Could be. I mean, we're into September. We're not quite into fourth quarter. Fourth quarter would be October, but you got to think that market participants like the hedge funds and stuff, they're positioning themselves for Q4, this month at some point. And that could be what they're doing with the good old Bitcoins here.
Mm-hmm.
I'm sure people are so annoyed with this, as I'm kind of annoyed with it. I mean, I kind of understand what's going on, but the way it's chopping in there, it's just, yeah. Lower lows, lower highs. So what if the bull run didn't even start yet?
Okay, I'm listening.
The C19 plunge. Yeah, the C19 plunge that happened in 2019, that offered liquidity into the market to push prices up. And seeing how, I'm just going by the crypto market here, Bitcoin's been kind of lackluster here and there. It had a nice rip, don't get me wrong, which it did that in 2019. It went up from 3,100 to 13,400, I think it was.
Yeah.
So that was a nice rip roaring rally, and then it retraced the entire move.
Mm-hmm.
And if we do that again, we're going down to 30K for that liquidity to come in. Because right now we don't have like real reason to be expecting really high inflation. The money supply is going down. The only liquidity we're really having is bullishness / complacency of, well, the markets are still going up, so I got to keep buying, with the exception of Bitcoin. But altcoins haven't done anything, and this is similar to 2019, where altcoins really didn't do much. They kind of had a 618 retrace and didn't follow Bitcoin on the 2019 rally. I mean, that was a 300% rally, 400%, and the altcoins did maybe a doubling. They should have done way more than that, but maybe we're about to experience some kind of liquidity crash. And then gold, we're expecting a cycle low sometime early next year.
Yep.
And maybe that's the time that Bitcoin kind of starts acting like gold. And then it has a rip roaring rally and we have money printer come in, but maybe the stock market doesn't do so well for a couple of years. But you have this store of value narrative with gold and maybe Bitcoin. And maybe the altcoins don't do anything. We've kind of been talking about that for the past 6 months. But they're not looking great.
Yep. Meanwhile, you got Bitcoin dominance still just grinding up. People still trying to call tops.
Yeah. Every top is a top, every bottom is a bottom.
Yep.
It's the same thing going on with this chart right here. Every bottom is, there's the bottom, there's the bottom.
Yep.
Like, okay, well, it has to bottom first. And, you know, you try to find a buy setup here. The only thing I found was previous low and the encroachment on the weekly wick figure loss. And then if it gets back into this consolidation, you still there, Camel?
Yeah, hang on. It said OBS disconnected, and then it said reconnected. Chat, can you just confirm you can still hear us both, please? I still hear you, Kemo.
Yeah, and then we have the 1 minute delay.
Oh, one sec. I mean, this thing still seems to be working. Yeah, it said we're good. Okay, sorry, keep going, Kemo.
Yeah, we're good. Cool. We have this liquidity down here. We had liquidity there. We grabbed that liquidity and forced that there. Just markets doing what markets do. They need liquidity to move. And there's no reason to mark this thing up yet. Like, there's no big catalyst. Not to say that a catalyst isn't right around the corner with, you know, things happening in September. You know, a Q4 coming up that could provide some kind of Santa Claus rally, which I'm not opposed to. But yeah, this is the area that I was looking to buy. Looking for a reaction in this area. If you don't have a reaction, then there's nothing saying that it's not going to go break this low.
Yep.
So the way I would trade, if I'm trading leverage, is wait for a reaction. Then I have a stop loss. And then if that stop loss is broken, I'm targeting that wick.
Yep.
Probably target that liquidity and then bounce again into supply. And I would expect more down, to be honest. I'd have to revisit it, but it's not looking great unless if this reacts here, chops around, gets back inside this consolidation, and then you're targeting this liquidity. So maybe you have it up, a little down, then up to grab that liquidity, down, and then you break out to all-time highs to grab all of that liquidity. That's kind of the way I'm looking at it. And this could happen very fast, and you won't have time to think. But like you were talking about in your video, this is why I said you made an excellent video talking about the exit liquidity, how a lot of market participants that are newer, they're like, I can't wait to, you know, use the market as my exit liquidity. I can't wait to jump on other people. And these are people that have poor trading habits, most likely.
Yep.
And they've gotten burned by the market maker, and they want to now get revenge. And like, well, I'm going to do it to somebody else just to know what it feels like, I guess. Maybe you'll feel better. But I don't think of it like that. Like, I don't need to dump my bags on somebody else. I want the bank to buy my bags, you know, because they're pushing up liquidity. And if you think like Warren Buffett, if he's trading this chart, he's selling all of this. He doesn't care about the liquidity up there. He needs to find liquidity to sell into so that he can exit. So this is like the billionaire exit, not necessarily for Bitcoin, but on a chart, that's kind of what it looks like. And then this is like your millionaire exit. And then it dips down, and here is the plebs that buy the dip, that keeps on dipping.
Yeah.
So it's something to think about. People are talking like, I want to be like Warren Buffett. Like, well, this is Warren Buffett's selling area. He doesn't care about extra profits. He's already made 3x on his money.
Yeah.
Same thing with Michael Burry, the way he looks at charts. So it all depends on your liquidity. Exit liquidity for billionaires is them selling into you. It does look like a distribution. It really does.
Yeah.
It's also an accumulation. Somebody is buying the lows, so that's promising. But that could be because they're not going to have enough liquidity down at 30,000. If that ends up being a bottom, they're not going to have enough liquidity down there to buy. So somebody is buying this in anticipation of maybe a shakeout and then a reverse. That's an idea into potentially a super cycle idea. But that's meaning that the world is falling apart. You know, not looking good. Yeah, exit liquidity. And be careful who you're following out there, guys. there's only a handful of accounts that I can tolerate, and having experience in the markets, you look at the stuff that they say, and it's like, no, you're kind of miseducating people. That's not quite the way it works. Like we talk about market makers, right?
Yep.
The market maker needed to do this, but if you actually speak to a market maker, they don't care about like making people afraid to buy. That's not really the market maker's job. They're there to provide liquidity. What is, I think what people are confusing it with is the whales, or even the liquidity providers. They do push price around where they need it because they're providing liquidity. But if you're just making the market, you're just buying and selling and trying to stay hedged.
Yep.
But there's liquidity providers that do take advantage of traders on smaller time frames, and they get you to buy, and then they dump it on you. Even though it's in a downtrend, you want to buy the dip, but it's still going down. You know, it's hard to explain. Like, you have a downtrend. It's not as good to buy the dip in a downtrend until you show strength, and then you're in a potential uptrend. That's what I try to teach people on my channel. That's like the first video that I released. I was like, watch the closing price. It's speaking to you.
Yep.
And I encourage people to go watch that, but I think that has the least views on my channel. People don't want to learn.
I always use the term change in market structure.
Yeah. You'd have a change. I call it change in behavior, but yeah, same thing. The behavior
right
here on the 4 hour is down, down, down until you have something that's doing something different.
Yeah.
Yeah, change in market structure. A lot of people don't understand what is market structure. Essentially, it's the same thing. Lower lows, lower highs until you get a change in that structure of lower lows, lower highs. Yeah, this is looking really good for a little ABC. Hopefully coming soon. We'll see. We'll let it finish out the day. Maybe we'll get a bounce over the weekend and reassess it. Or maybe we get that short squeeze over the weekend, like Nvidia.
I think I'd love to see it, but I don't know. This thing is just looking heavier and heavier by the day now.
Yeah. So we've got a lot of like on Twitter, we see the bullishness, like we're about to go, it's about to go, and you're following these people that they're not looking at, you know, the lower lows and lower highs. They just have their bias that says it's going up, and if it doesn't go up, then I'll buy the dip. And it's like, well, where's the dip? So, like, I try to be objective as possible on my channel and with what I do. It's like I trade the liquidity. Seeing the liquidity, you see a liquidity sweep there, back to there, trade it up. Get stopped out, that's fine. And then you do the same thing here. Same pattern repeats over and over. It's just a swing failure pattern. You had a slightly higher high, buy the higher low. Right here, you had a slightly higher high, buy the higher low. Right here, we're hoping for the same thing. Back at support, back at these closes even. We have like a 50%. No, that's a 702 retrace down to this area. So that's a blockchain backer retracement, but looking for a potential liquidity grab and reverse. But we don't have any higher highs. So you have to entertain the pattern that says we're going to grab liquidity and go down again, which would match the pattern like this, doing that. And this is just, you know, that matches that. And now we're repeating this leg down. And that would look like this, pop up, break the low. And then we're going like all the way into November to finish off that pattern. You know, this thing could stay sideways as long as they need it to stay sideways. And if it holds above 43, it's still technically okay. But you want to see a change in that weekly market structure to really get going. And we're not getting that. I mean, we haven't gotten it yet. So you can follow people that'll say 100K all day. You can follow people that are say we're going to 8K. But a lot of people are talking out of their backsides.
Kemo, a question I get an awful lot is, imagine you're not a trader and you only hold some spot. At what point do you say, time to let some of the spot go? Or at what point do you say, time to add significantly to the spot stack?
Where do I let this? I think the daily closure was my invalidation for this continuing up. 50,000. I'd probably take off 25%. To be honest.
Daily close below 50, did you say?
Yeah, daily close invalidates it. Because I'm matching this lower pattern here.
Yeah.
And just the way that I look at markets, I can reassess and jump back in. But we'll just measure this down to there and project from the closing high. Yeah, so a closure. Yeah, closure below 49 definitely says this is not doing the same thing. So if we get daily closures below that wick, yeah, I'd take off 25%. I don't plan on selling everything at a top. I need to have some exposure. Otherwise, I don't feel comfortable. I'm one of those guys.
Yep, same here, same here.
But yeah, 100% either way. But where would I look to get back in? We will take this on a weekly chart, assuming this tops right here, and it does want to come down COVID-19 style. You have your high here, slightly higher high. Here's your low. I'd look for slightly higher low, somewhere in this liquidity to add spot back. And then closures below, probably on a weekly closure below that, bear market low that we had at 15.5, would say something is not right. Like the protocol has changed or something like that. Do you know that guy on Twitter, Jackus?
I'm not sure.
Yeah,
Sounds
he's
familiar.
Definitely a good trader. He's in Spaces. I'll have to share the post, but he had a nice video that was talking about this accumulation range. And some people are calling like this the accumulation range. That is very, very incorrect. This whole thing is your accumulation range. It started in June of 2022, actually technically there. This was accumulation. This is accumulation. This is reaccumulation. So this whole thing should not be broken as a whole.
Yep.
You can dip into it. That would actually be bullish. You dip into it and just grab all that liquidity. But this should be major support. And then you reverse out of there. So if I do get price action that comes in bases around liquidity right here, then I'd be looking for a reaction, and maybe the same thing here where you had a weekly higher high, just add spot right there. You don't got to rush in and rush out. It'll probably be pretty nasty. We probably have some bad news if it does get down there.
Yep.
But yeah, a daily closure, I think, below that wick, and it's kind of get out of the market a little bit and probably wait till November, mid-November, and see if we get like a mid-cycle low, and see if we get a reaction there and a higher high close. Because on a weekly scale, locally here, you're still in a downtrend, especially if this closes down here. I didn't want to see a weekly wick down or a weekly close down there, but lo and behold, there's your low. And if we close another low, that gives you the downtrend until closing right up above here. Then I'd add back at some kind of support or above all-time highs, holding support. You could add it back there. What are you losing? 20K on something that, if that pattern happens, you're going up another 30 or 40K. So take what you can get, I guess, at that point. It's better than nothing. But you got to lock in something if the charts aren't looking right.
Yeah.
If the charts aren't making sense anymore, it's time to step aside from a trading perspective. Might be looking more for sell setups if we close a daily candle there. I would just keep, something like that. reject again, look for this liquidity, bounce, look for this liquidity, and then we're, having bad economic data or something like that. The S&P 500 is falling off a cliff. Something bad's happening.
Global recession.
Yeah. Yep, the recession, and then we're going to see what Bitcoin does in a recession, which initially I think it's going to do pretty garbage.
Yeah,
and then
I
it's
do
going to
too.
do great.
Yeah, I think, to be honest, I've always been working under the assumption that it's gonna suffer in a recession, and it's gonna take until the next round of true QE with return to Fed balance sheet expansion before it actually starts performing the way it's designed to perform.
Yeah,
I just think the market cap's too small for it to be a true risk-off asset, and it's too volatile, and there's not enough supply. I don't think it can happen yet.
Yeah, I can see what you're saying. But if we hold support there and base out somewhere above there or just in this liquidity, that QE could come in really quick. Like if it comes in COVID-19 style, imagine this scenario. We have some kind of plunge where gold and Bitcoin potentially have that C19 plunge. And you have a 50 to 60, 70% retrace in Bitcoin fairly quickly, within 3 months, 4 months, or something like that. It comes pretty quick. And you hear about money printers going, you may have Bitcoin turn into that risk-off asset and going along with gold. Because it doesn't have a lot of supply, it can really, really outperform gold at that point. But then you're operating on the idea that it is a store of value, so there's risk involved there. I mean, this thing could go to zero.
Yep.
You never know. Gold, you don't have as much a risk that it goes to zero, but you're also not going to get the returns that Bitcoin gives you, because less risk, less reward. But I was talking to CPM on his channel on that podcast that we did, and I'm like, we may be coming up on a time where you don't necessarily want a return on your investment. You just want your investment to return to you,
Yeah.
So it's risk off, heavy risk off, and you buy gold just so you make sure you get your money back,
Yeah.
And Bitcoin could be total risk, and we base here for 2 years or something like that into the next cycle low. And this could be the top. I mean, we have complacency currently. We do have liquidity above, but Bitcoin doesn't seem to want that liquidity. Distribution, pop up for liquidity, and then maybe come down along with the stock market. That would make sense. We're in a pretty spot.
I saw there was.
We've been talking.
I saw there was 20.
Months.
Say again.
We've been talking about the liquidity above for months now.
Yeah, I saw there was 21 billion of liquidity up there apparently.
Liquidations that would happen.
Yeah, I showed it on the channel the other day. 21 billion, and it seems crazy that they wouldn't want it.
Yeah, and that is a catalyst to push you up to even higher numbers. Like, I think I responded to somebody on Twitter, and I was like, this might have a short squeeze over the weekend, like Nvidia does, where price pushes up here and it holds. So anybody who is short from here, they close their positions, those turn into buy at market, and then you get up to your 100K. But you would have to see a short squeeze over the weekend, and then price just hovers up there, and it forces all those people to buy the top.
Yeah.
And then reverse. So it's something that these are all liquidity games, and these banks know where their liquidity is. So the fact that they don't want this just yet, I mean, what does that mean? Are we going to do the after earnings Nvidia? Just pop. Now you're trapped and you're short, and you're buying all this, and then you have a distribution up here, and then reverse. Everybody's like, "Oh, we're above 100K. You have to buy." No, that's a sell.
Yep. Yep.
Oh, these markets are so fun. We have a good time.
It went from a really good time to like not so fun pretty quickly.
It's an emotional roller coaster, I guess, in the current area. I definitely had that in my feed, what I was seeing on social medias and stuff. I mean, how many times did we hear we're so back? 1, 2, 3, 4, 5, 6, 7, maybe 8 or 9 times. Some prominent accounts were saying we're so back. Here we go. And no, sorry, it's not yet.
But
Somebody's selling here.
Maybe the CPI can save it, right? Maybe.
Yeah, like I said, this support should hold. If it doesn't, then that's bad. And it's just like the same setup that I had last go around when it was coming down. I was like, okay, we got a higher high. We have a potential for a higher low to come in. I stopped out and I shorted it down to there. So know your invalidations and know what's going on. As soon as it breaks a certain area and there's no more liquidity, but it keeps pushing, it's going for the next liquidity that it can see. And if this wick right there is broken, I mean, I'm looking left here, there's no more liquidity until minimum down at 41 and then the 38,500. And that's just the way I would trade a 15-minute chart, is just looking at the daily the same way. It's just bigger players and it takes longer to move. But yeah, I would trade a 1 hour or a 4 hour chart the same way. If I break below that liquidity grab, it's pushing down. But if you grab liquidity to the upside, that's a take profit sell, comes back down and it breaks above that liquidity grab, it's searching out higher liquidity.
Yeah.
And you can take a breakout trade of the initial breakout for continuation. It usually goes, it goes a little way before it reverses, but there are some times where it just traps you. So know your invalidations when that happens. But on the higher time frames, it's more likely that it'll continue after grabbing liquidity. Works for the upside and the downside.
Can I get you to pull up a gold chart, Kemo?
Ooh, let's pull up gold. Been very interested in gold lately. It's looking really good.
Me too.
Oh, Barrick. So I want XAU. Wanda? Let's see what. Oh, I actually do have a clean chart. Ooh, so last time we spoke was right around here.
Yep.
I think I called that out on the channel, and you were looking for a cycle low of some sorts.
Yep.
We had a disagreement about the buy setup and sell setup.
Yep.
And I thought about this after the fact, where you were looking to sweep these lows. And I said, yeah, that's, it's always possible. It's a market. But when I was looking at the structure here and just maintaining the higher high, higher low, I didn't want to see that. And this is just after the fact thinking about it, being like, this makes sense to just come back down, back test that breakout, and then continue to push if you want the market to stay really bullish. Whereas if it came down and grabbed that liquidity and had a closure there, you got a lower low, you would sell the lower high, expecting further downside.
Yep.
So somebody was mentioning this. I think he's a day trader, a guy that I follow and I responded to last night. It was like the market seems to push and it doesn't give you very good entries. And this is an example of that, where you want it to grab that liquidity for entry, but you have to just buy the higher low in expectations of not getting stopped out. They're not the best entries for sure. And you're buying a break, back test. I wouldn't even know where to put a stop loss the way you trade it. I think my invalidation was it this leg at the 1618, which my invalidation would have been at those stop losses anyway.
Okay.
But then I would have probably got back in right there at a swing failure pattern. But yeah, too bullish gold, too bullish. This is looking really good. Let's look on a weekly chart. But yeah, that's just something that I thought about last time we spoke. We had a difference of opinion.
Yeah, I think we agree on looking for a top in the next month or two, right?
Yeah.
A local top, and then looking for that yearly cycle low. between December and March.
Yes, we're just matching patterns here on the weekly chart. This should be coming up into this leg repeating. So should I draw it out or measure it first? I'll do both. Trend base sub extension. I'm going to measure this first leg up on closes for nice. And then I'll take a screenshot. I think Andrew had the same idea because we were throwing charts back and forth. I think it was last week. And I was looking at matching this with this. And then this leg should match up into this area. And then what repeats is this super bear market into that yearly cycle low. And then this leg would repeat. And that might be all you get. This is, you'd expect this to go higher based upon the money printing that we kind of foresee coming in, say, 2026.
Yeah.
Maybe this is 1, 2, 3, 4, 5. Sharp down to grab that liquidity. And that's just wave 1. This is wave 2. And then you get your $20,000 gold by 2029, 2030.
Yeah.
Dude, it's on the monthly chart, that's what it looks like. Honestly.
Man, if this whole thing is wave 1, that would be crazy. But it wouldn't surprise me either.
Yeah, so this would be 1, 2, 3, 4, 5.
Yep.
Back test previous all-time high, and then rip. This is, it could be massive.
It will be. I'm sure of that.
Just matching these legs down here, ABC, ABC. I mean, we're repeating this leg essentially.
Yeah.
Like I got like way too bullish on this.
I mean,
shiny rock,
It knows something, right? It knows something. It's breaking out to all-time highs whilst the stock market was running to all-time highs. So it knows something.
Yeah, for sure. Central banks, like you said, they're not just going to toss that in the sea.
Yeah.
They've got a plan for gold. Let's see, 8 to 10, $10,000, $11,000 gold, something like that. Matching those legs just like that. 2028. I don't know. Measure the time frame that this took and add to that. Something like that. But this should do fairly well. This is after years of consolidation, couple of cup and handle patterns. This is accumulation after reaccumulation, which means money printer goes. There's your accumulation, cup and handle, maybe back test the top of that, and then push up.
Yep. I'm super excited about it. Can we do silver whilst we're here as well, Kemo?
Silver I didn't like that much.
Say again?
I'm kind of mad at I'm kind of mad at silver. I hold silver. I don't hold much gold. What do we got here? Because like I was talking to the Creative Precious Metals, and telling them like silver is kind of more manufacturing that's going to be necessary in the future, but it's not monetary the way that it used to be. Because probably with technology, I mean, technically Bitcoin covers the store of value and being able to send money, across borders. So gold doesn't even work for that anymore. But we needed silver years back when gold was just too heavy to carry, a couple $1,000s worth of gold back then, which would have been big bricks of the stuff.
Yep.
Whereas silver was divisible, fairly easy to divide, to pay for what you needed to on a day-to-day basis. But we don't really need that technology anymore. So silver needs to find its place. It needs to find its new use case, kind of.
Yep.
That looks like a completed pattern for now. that doesn't look good on a monthly chart. That looks complete. This little move up since September of 2022.
Show me
That
what
looks
you
complete.
show me what you're seeing.
Yeah, let me draw it out. It's essentially just an ABC up, and that didn't go up very high. Dude, but that's bullish. Okay, I see the bullishness in this, but it's long-term bullish. It's not right now bullish. That's just 3 waves there, and you come back down into your bear market, and then money printer goes. This is your wave 1. This was an accumulation range.
Okay, yeah.
That looks textbook Wyckoff right there. It looks really good. Had the swing failure pattern right there, back inside the box, get up there, into a reaccumulation pattern here. So they're not ready to move it up, but somebody's accumulating this for, I would say, years of markup. This may outperform gold like 4 years from now. That would be crazy. Just looking at this based on what I'm seeing. You got a wave 2 here. Yep. This would be your wave 3. So good things to come for silver, but I think it takes a few years to get it going, where gold is kind of already going. You're breaking out here on silver, but you're coming back. Maybe you're doing what gold did. Gold did the same thing where it did the swing failure pattern.
Yeah.
And then broke out to an all-time high. Could be repeating that pattern, but for now it looks like a sell setup. Just because of the ABC completed pattern, took this liquidity. Just like gold, you break above that, you're going bull market. And you could target these liquidities over here. 48 to 60, I think we were looking at. We've been looking at that for the past 6 months.
Do you know?
I'm okay with.
Do you know David Hunter has 3,000 to 3,300 target for gold this year, and $75 silver.
Yeah, they're all raising their prices though into complacency.
Yeah.
You know what I mean? Like he's been talking at high prices for stuff down at lows like here. He's like, here we go, and it dipped and it dipped. It aggravated his followers. And he's like, well, give it some time. It's going to go. There we go. It went, grabbed liquidity. Sorry, Dave. We need this liquidity now. For now, that's kind of what I'm just at a glance. The way I would trade this chart is short it, stop loss up there. Until that's broken, immediately buy the break out of that, just like you do with gold.
Yeah.
Just like you do with any chart, really. You grab this liquidity. After you grab that liquidity and pull down, any break of that liquidity grab means you're going into markup phase. And you would draw your trend line like that. There's a 1, 2, 3 angles of attack. Let's go $60.
Yep.
Keep it simple. I mean, we do this over and over, daily, weekly. We've traded these setups so many times. It becomes like a reflex like that for anybody that's listening. Like, you guys talk really fast. I mean, Camel, when you talk about cycles, Camel can go fast. And I do the same thing with liquidity. It's just, there you go, there you go. Seen it all before. Trade there. Manage the risk from there. Yeah, you close back inside of this consolidation on a monthly. You're going to take that liquidity.
Yep.
Stay above it and break above there again. Hey, it's go time.
And maybe he's right. Maybe we do get $75.
Yeah. Like from this chart I'm not opposed to it on this chart. So this can be your wave 2. This could be 1, 2, 3, 4, 5, something like that. And then you come down, and that would be 1, 2, 1, 2, and then you really get going. But like I said, it seems to be behind gold. It's not showing that same strength. So gold is the place to be until gold starts to provide liquidity to its shitcoins. You know, kind of like Bitcoin with Ethereum. Kind of treat these the same way, where gold's going to run, then gold pauses, goes into distribution, and then the other metals get to play a little bit.
Yep.
So maybe you just backtest this, and this was your reaccumulation. I'd be fine with that. If it holds above there, and starts, closing higher highs and higher lows there, you're starting to see this consolidation, and then you can trade it up higher. But I really want to see the break of that high. And if you would have done that with gold, like we were tracking that one pretty well. I called that top pretty well, but that top got broken. I said, as soon as that top breaks, it's no longer distribution.
Yep.
And you would have done well just buying a break of that liquidity graph. And you'd be right about here by now.
Yep.
On gold. So the charts all work the same way. They're doing the same things. S&P 500. How's the chat doing? How many we got in there?
I will let you know. 1 second. We've got about 486.
Jeez, you are famous, dude.
You are now as well. The CPI one last month had 1,600 at peak, I think.
I have to do this. Do not disturb. Sorry about that.
No problem.
Okay, CPI what?
Say again?
I didn't hear what you said.
Oh, I said at the last CPI live stream, we had 1,600 people in it. Which was wild. Crazy.
Yeah, I missed it as your main moderator guy.
Yeah, it's okay. It's probably a little early for you, right?
It depends on how lazy I am, yeah.
What time is...
If I'm up late
what
making
time
a video or something like that. CPI comes out at like 8:30 in the morning, right?
For you, your time, yeah, it must be about that, yeah.
Yeah, so I don't really talk to anybody until 9:30. I usually wake up pretty slow and just take my time with things, especially if I'm up late looking at charts, answering questions.
Yeah, you're
like last night, I got a video like 2 to 3 a.m., probably right when you were waking up.
Yeah, you're up all times of the night often, aren't you?
Yeah, just chilling, looking at charts, doing research on what I can, and just scrolling through Twitter, seeing people talk smack about, I mean, it turned into everybody's everybody's talking about their bags. Be like, this shitcoin is undervalued. You need to buy this. Like, why do I need to buy it? Just because you already bought it. I don't need your shitcoin. But it's just constantly everybody competing to get everybody else to buy their shitcoin. And unfortunately, Bitcoin dominance says it's not time for that. And I mean, we're pretty stagnant. S&P 500. This is a very nice run, given 18 months, 2 years here. That's a nice return.
Yeah, that's a decade's worth of performance there, isn't it?
Yeah, where did you get that comparison?
Well, it's just
decades worth of.
No, doesn't it just do 6 or 7% annualized? Isn't that the overall return of the S&P?
Oh, 8 to 12.
Oh, is it? I thought it was 6%.
Oh, yeah. I don't track it all that much.
Let me Google it whilst you're showing some charts.
Mm-hmm.
I'll look it up.
Measurement here. That chart went up 60%. So yeah, I mean, if you average 10%, even you've got six years of gains that happened in 2 years. So outsized gains, but this was even better. This COVID dropping. This is the type of liquidity we need.
Oh, Kemo.
Oh man.
10% annualized for the S&P 500 and a 60-40 standard bond stock split is 6 to 7% a year.
Oh, okay. Which doesn't even keep you even close to inflation.
Nope.
That's so messed up. And this is on the weekly chart. Let's go on a monthly chart of the S&P 500. Why I was so keen on that 5700. was the Elliot Wave 1, 2, 1, 2, 3, 4, 5. You know what? Let's label this. We'll label the interior here as a, I'm going to say 1, 2, 3, 4, 5. And then we will label that something like this. 1, 2, there's your 3, 4. We're working on 5. And where does 5 end up? General rule of thumb of Elliott Wave is you take the measurement of wave 1 and wave 3 together, project it from the bottom of 4, and you target the 618. We're already at target. So this is an area where you would look for a reaction on the monthly chart. So we might be getting a reaction on the monthly chart here that'll be substantial. That's the way I derived my target from the stuff that I wrote last year. And I was like, what happens when you reach 5,700? I know what I would be looking for at 5,700 area. I think I had a way to count this that made it really, really tighter as to probably something like that. Or it may have been the Dow Jones. But these are the areas that I've been looking at for the past 4 years as a topping target or a wave 5 target. That doesn't mean that it's going to stop there for sure, but it's in the vicinity of expectations for something major to start happening in these charts. 1, turn this extension. Let's measure this last portion, which is the potential 5th of the 5th of the 5th. 618 is right there, 5,800.
Oof.
If we get a little tighter on that bottom wick, we technically already hit it. We're off by a few dollars for the Elliott Wave target. That's not the end all be all, but that's where you're going to have larger players that are going to potentially trade it like an Elliott Wave and expect wave 1 plus 3 projected from 4. That's your target. And some big money players may be looking to exit there,
Yep.
which could get you into a distribution pattern. And this could just repeat the previous leg for a year. This will be wave A, B, and then you just do a C leg. It could be that minute, but the setup is definitely there to start really impulsing down like a wave 1, 2, 3, 4, 5 for an initial target down. That's just the first leg down. And then you'd have a bounce up and then back down again. So it's not to say that these lower targets are necessarily going to get hit. You just have a setup that says something's about to change. You definitely want to be aware of this. Given the yield curve, how it's reverting back up, you share that every day, and I'm sure you're going to do a deep dive on that tomorrow.
Yep.
That's looking ominous. I mean, 100% accuracy on predicting recessions.
Yep.
The SOM rule that you turned me on to, same thing. Everything's triggering, and the fake economic data that we're getting has people, has the sheep's wool over their eyes, and they're just going to remain sheep.
Yeah.
Well, there's a lot of people like around me that aren't necessarily traders, but they know that I know how to read the markets pretty well. So they ask my advice, and I'm like, buy some puts. And they're like, yeah, but if I profit too much, then I'm going to be taxed in a higher bracket and this and that. I'm like, well, yeah, you do you. But I mean, you're going to be taxed. They're going to take away, if it's short term, they're going to take away 25% of your money. Give them the 25%. You're going to make $100,000 on your puts or selling your stock and buying your stock. Give 25 grand to the government. You get to keep 75. It's not a bad deal.
Yeah.
I'll tell you when to get back in, bro.
Yeah, there's like 2 ways to approach that, isn't there? there's the first way, which is I don't want to pay any tax at all. And I don't think that's necessarily, like, no one likes to pay tax, but, and then the second way, I still don't think that's necessarily the best way to approach it. But the second way to approach it is, like, I think it's Mark Minavilli says this, that he wants to pay as much tax as possible because the more tax he's paying, the more money he's putting in his pocket.
Yeah. I've heard that before. But yeah, this looks like, right there. 1, 2, 3, 4, 5. Let's just label this out on Nvidia here. Just at a glance, Elliot Wave patterns, dude.
You're down to 102 now. Holy.
So I would label it like this, and this is your wave 3 top.
Mm-hmm.
Get some more Elliott waves here, and we've still got potentially 1, 2. We could go from here. 1, 2. This is 3. Come back to wave 4 of lesser degree somewhere in this area. I think we're looking at I think originally it was supposed to be like $12 to $15. We were talking before.
Yep.
But just matching this structure down here, you should be looking at $12. So I mean that's 90% down before going up for just matching those legs.
What a trade setup out of that low, though.
Yeah.
The long-term
trade
hold.
setup is there, just matching this leg. Well, yeah, there's a long-term hold. There's a buyback, though. So wave 1 plus 3 projected from the bottom of 4 gives you the 618 at 126. We tagged that perfectly.
Mm-hmm.
So the way that I'm kind of looking at a lot of charts, it says that we're going to have a fairly big bounce, which AI is going to be big in the future. It has to be because that's how they're going to control everybody.
Yep.
So, this pattern matches this or whatever. But this looks fairly complete. I think I called that out back in May during our lives. This was a rough target here, and I didn't want to see it go above 160, I think it was. At 160, I would say my pattern is saying this is repeating, and it's going way up, like $500.
Yep.
That means your money blew up.
Yep.
But for right now, if you measure this leg projected from this high, there's your trade setup there. Not a hold forever, but a hold to liquidity. And then get this to repeat. Back down again. And there, go up to like $800 to complete the pattern. Something like that. Then that pattern completes, then nobody needs AI anymore. And the aliens have come to visit us and showed us a new technology, I guess.
or just stolen all the Bitcoin.
Yeah, it's all in Bitcoin. And nobody cares about Nvidia. Or they... Did you see the Department of Justice supposedly issued them a subpoena? And then 12 hours later, Nvidia says, "Nope, we didn't get any subpoena."
I could not stop laughing. I couldn't believe it.
I was like, wow, they're taking crypto and turning it into traditional markets. Using the same gimmicks.
I couldn't stop laughing because the corruption goes so deep now that they just do whatever they want. Like you say, they just turned like this kind of crypto mentality of like this unregulated area, and they just did the exact same stuff in what's allegedly a superiorly regulated area of the market. Like, it just blew my mind. I couldn't stop laughing.
I think that's the most blatant thing that we've seen in TradFi, but there's a lot of shady stuff that goes on.
Yeah.
And some people are calling that a liquidity grab, and prices are going to push higher. And maybe that's just a reasoning people gave to have prices move down and get people to think, oh, it's just a dip, buy the dip, it's going back up again. And as we can see on this chart on Nvidia, it reached target. So this is like the trade that I called, that pattern matching. I think I was matching that leg right there with that leg right there. One more push up should do it. We got that, and then a large leg came down that doesn't match anything else in that structure that looks complete. So this moving down, I think on a daily chart, it gave you a lower low close. I said it's probably topping here, but you really have confirmation as soon as your weekly is going to close below that current weekly, then you're starting a downtrend. And that looks really ominous. And you're searching out this liquidity at 36, and I think there's a gap fill below 36 into 31 or something like that on the daily. So that's first liquidity that I'd be looking for. Well, this could be repeating this leg. Really don't know, but that's somewhere to look for a reaction. And we did get a reaction. So that is how a trade setup for me starts, is it reached an area that I was looking for a target for a matching pattern completion. Then we had a reaction, then that becomes your stop loss. Be careful with the stop losses with Nvidia, because they give you the earnings and after hours, and they close up higher, and then you're forced to close out your position in the negative as it pushes up. The same thing that I'm kind of expecting Bitcoin to potentially do over the weekend, over some weekend, not this weekend necessarily, but one of these weekends coming up. Look for some shady stuff like that. Or
Did you notice,
out of the blue?
Did you notice Nvidia beats earnings? The most recent set of earnings, it was all a beat, and they still traded lower.
Mm-hmm. Yeah,
and that to me is a sign as well. When you, like you say, when you get to these levels, start looking for sell setups, and then when the bullish news no longer resolves to bullish price action, that's usually a hint that we could be around the top.
That's a big hint, though, and a lot of market participants don't look at that. It's like the sentiment, and bullish news is no longer bullish.
Yep.
A real raging bull market, bearish news doesn't do much. It gives you small, what is that called? The 382 retrace on the Fibonacci. It doesn't even give you a 50% retrace. So it has little effect. And at the bear market lows, the bearish, like FTX collapsed on crypto.
Yep.
And the FTX collapse made the low, and we still had bearish news, bad news coming out, people calling for lower, and it had no effect on the market. The market couldn't, there was no more sellers left. It couldn't push lower. So then okay, we're not having an effect. It's time to start looking in the other direction. And like you just stated with Nvidia, they did beat earnings, and maybe their forward guidance wasn't up to par, or whatever narrative they want to give you, but the liquidity is gone, and they don't have it to push it up anymore. Everybody has already bought.
And did you notice, like we were just saying, the subpoena news comes out as fake news, and even that didn't push the price back up.
Ooh.
So
yeah, I didn't even.
I mean, I was kind of looking at it like, oh, here we go. I was thinking half cycle low for the stock market, and this is going to be the catalyst, and then the market doesn't care. So again, that's not to be ignored,
Yeah, it didn't get any reprieve, because that just happened, and we're still trending down since last week.
Yep.
Here on 4 hour, what is that? 28th. Yeah. That news came out somewhere around here. I'm like, no, that was fake news. I'm like, yeah, I don't care. I'm still going down.
yeah, exactly. So we're now in the stage where good news is bad news, and again, it's slowly but surely.
Bad news is really bad.
Yeah, and slowly but surely we're just becoming more and more bearish here.
Yeah, well, they had plenty of time to exit. Yield curve, everybody sees it. We're just waiting for our catalyst. So then what's the catalyst? I mean, we were kind of postulating that it would be some kind of hack, banking hack, internet gets shut down or something like that. Maybe. I've been kind of looking into the United States having some problems with civil war or civil unrest, like more than usual. It kind of seems that that's what the narratives are going around. I've been listening to like podcasts that are political, kind of doing research on both ends of the aisle, both red and blue, and they both say the same things about the other side.
Yep.
That if the other side gets in, we're going into this authoritarian regime where they're going to control everything. The Democrats are saying if Donald Trump gets in, you're going into a dictatorship. And the Republicans are saying that if Kamala Harris gets in there, we're going into 1984 George Orwellian nightmare, authoritarian dystopia. Both sides are like, if the other side wins, we're all going to die, is kind of the narrative.
Yep.
So that tugs at people's heartstrings where, like, if the other side wins, we have to fight back at all costs because we're dead anyway.
Yep.
That could lead to really bad things coming in November and December. And it's likely that these markets are going to start pricing that in. The more and more they start pushing that narrative. And that way, the banks are not to blame. It's the people that rose up and caused all this problem. You guys shouldn't have done that. Now you destroyed the markets and now you're broke. Don't worry. We're going to help you out here and we're going to give you a universal basic income. So that's kind of my current working thesis, subject to change day to day based upon information that comes in, but it kind of fits with what's going on, the timing, potentially topping out the stock market and stuff within the next month or so, next few weeks.
Yep.
And slowly start pushing down, people buying the dip, that's fine, but we close a weekly lower low, that's a big red flag. Also, what you're saying about the news, when it's bullish, it doesn't have any effect, big red flag. So start paying attention to these things, guys. And of course, watch Camel, because Camel's got his, he's got a good read on all this stuff as it's playing out. And knows how to invalidate his setups, which is crucial with anybody you're following. If they don't use a stop loss, they're not a trader.
Yeah, 100% true. 100% true.
I mean, that's like the easiest way to distinguish whether or not you're following somebody that actually has experience in the markets. Because if you have experience in the markets, you've been rinsed countless times, and you eventually learn, I need invalidation.
Yep.
If I have an invalidation that protects some capital, I look for the opportunities, but I have the invalidation. And there's a lot of influencers out there that'll just, they'll just say, well, I don't really have an invalidation. I just feel that the price is going to do this based upon whatever information they have. And that's fine. You can have that. Where do you become invalidated?
Yeah.
Like
anyone that doesn't have an invalidation level is definitely not a trader, right?
Yeah, they could be an investor. That's fine. And they think that investing is a long-term trade. Like, oh, I'm trading the monthly chart. It's like, but you still have an invalidation, even on a monthly chart. Like my monthly invalidation would be a monthly close below 15,000 on Bitcoin. Close below that, and something is seriously wrong with it. And I would expect lower prices, potentially down to 3,000, and then reassess it. But it's touch and go. But at least know when to get out. Daily close below 50,000 is my cue to take off 25% of my spot trading. My long-term holds, just close out 25% of it, get into some cash, look for opportunities lower. And a weekly close, lower low on the S&P 500, that tells me look out below. We're likely changing. I mean, we have a change of behavior there on a weekly chart, breaking market structure, likely breaking some trend lines there. But people that don't have invalidations, they're just flying blind. And if you're going to follow somebody that's flying blind, when it crashes, you're going to crash too.
Yep, 100%. Kemo, I don't know if you'll be able to see it, but you know what you were saying a minute ago before this about looking at a potential catalyst, or we were speculating it might be bank failures or whatever else.
Yeah.
So on let me see if I can pull this up for the people watching. You might have to view this later in life on repeat. But have you seen the film Leave the World Behind on Netflix?
I have.
Right. So there's the theme. For anyone that doesn't know, it's like blackouts and the end of the world. Not the end of the world, but like there's cyber attacks and nobody really knows what's going on, and planes fall from the sky and all of this kind of crazy stuff, right? But they've got the emergency broadcast system, which beeps and tells them there's an emergency alert or whatever in the film.
Yeah.
So I've got it up on the screen now. I don't think you can see it, but everyone else can. And the date right here from the film is September 17th. And then it's got a time of 0204, but in numerology, you cancel out the zeros.
My.
So, yeah, September 17th, 2024 for the emergency alert system, straight from that film. So I don't want to say that this means anything, but it is right there. So I thought that was interesting.
It's a giant club. It's a giant club, and we're not in it.
Exactly.
Oh my gosh, that's a great find.
Yeah.
Wow.
So I don't know if that means anything or not, but like I said, there it is. So if something happens, like a cyber attack or a blackout on the 17th, then we can't say we weren't warned, because we were in that film.
Wow. And
Yeah,
that would
that's
turn the election process. Like,
that's
we're
the
not gonna
day
have
before
elections.
Yeah, and it's the day before FOMC rate cuts are allegedly supposed to be occurring, right?
So we don't get the rate cuts either that we want.
They don't need to cut rates, and they don't need to
Sorry.
not cut them, right? They just black the system out, and
Oh yeah. Well, okay. So we've been talking about that for the past 6 months, that there's going to be a reason why the Fed can't step in
and print money.
There you go. Yeah, they can't cut rates because the system is shut down, or they're incapacitated somehow. This could be, we're getting into some archaic
Yeah.
of,
Dato in the chat is saying also it's a lunar eclipse on that date as well.
we're coming to it, bro. So then our communications overseas is not going to be working very well potentially. So yeah, great find on that. That's crazy that those dates are there right in front of your face.
Yep.
And
Crazy.
is that so? Like, people talk about this, how the elites will put things like that, little alerts or whatever, and if you're complacent to it, you're accepting of it, and then they can carry out their plans. Have you heard something like that?
Yeah. It's called Karmic retribution. They believe if they do it in plain sight, then they don't have to suffer the karma from it.
Yeah. So they're good to do it, which is sick, but it could be what they're doing. I hate to be all conspiratorial in such a manner, but these conspiracy theories become conspiracy truths more often than not lately.
Yeah, I saw somebody wrote in the comments the other day the difference between what was it? The difference between conspiracy and truth was 6 months.
For sure. I mean, that's
Give it 6 months
wild times we live in.
Yeah, indeed.
4 hours. Nasty.
Is that the low,
Looking
Kemo?
at the
Is that the
4
low?
hours. Not for me, not yet.
Not
I
yet.
want to see probably 52.9 is just that lower liquidity right there. All right, so let's draw this chart. Let me take a screenshot and show you. Well, we can measure that too. Trend-based to extension. We'll measure from the high. Click to there. Project from the close. That gets you down in this area. And we'll take a screenshot and we'll mark it. And I'll have the buy setup that I'd be looking for and reasons why. So I'll find an argument why it goes bullish is the close right there. We have a higher high close. Here's your low. So the higher low should come in around this area. It just makes sense based upon higher highs, higher lows. And take that lower liquidity right here and have a reaction. If you break below that, you're targeting this liquidity and likely the previous liquidity, and then you've got some kind of ABC. Take that liquidity, and then see where the weekly closes. If the weekly closes below previous weekly, then we're in for some trouble. Shorts would be valid, in my opinion, and this would look more like a top. And this is just a retrace into distribution and back down, back up into distribution and back down.
Do you have any
Yeah.
fib-based time or any timing analysis that could point to a low lining up with CPI by any chance?
Sure. Before I get into that, invalidation for the setup, I think it's a closure on a 4-hour below 52.58. Always got to have the invalidations.
Okay.
That is paramount. It's how you differentiate yourself. And we're not just plebs.
No stop loss, bro. All in.
No stop loss. I know it because I can feel it in my gut. So that timing, just matching the timing of that leg down into that timing, puts you at the 9th of September. And then maybe repeat this and chop around a little bit.
Yep.
Sideways. That might look like a reaccumulation. Okay, let's draw that out. Time that. Put you at time here. Come on. 18th of September. So that's watch for some basing there. Now this is prognosticating what the future would hold. But it would look really good for this to become this. And then this sideways chop to be a reaccumulation in this area. Swing failure to lows, grabbing that liquidity at the last possible moment, probably here at the 18th. And then move higher.
I'm just
yeah, this is on the 18th. If we match this distribution and we go into a reaccumulation,
okay,
somewhere around there.
Cycle low
would, window wise.
Yeah, cycle low would be towards the 23rd daily cycle low.
I'd be fine with that. Because the rate decision is the 18th.
Yep.
So this lines up perfectly. Your timing, this distribution range, project in time in this area, to swing failure, and grab that liquidity. That looks pretty phenomenal for a trade setup. If that swing fails right there on a 4-hour chart, that's a buy setup for me. Stop loss goes right at the low.
Yep.
And expect upper liquidity and potentially that 5,700 after huge rate cuts. The Fed does care about us. They care about our economy.
Or do we go
again? Watch the video that Camel made today. They know exactly what they're doing. It's all controlled demolition. They know what they're doing.
Yep. 100%.
Okay, what were you gonna say? We're gonna go what?
I was gonna say, or do we go cyber attack blackout on the 17th, and then they have their excuse not to cut?
And then there's just a big gap in the chart sideways.
Kemo, I got a question. So I got a question here in the chat for you.
Yeah.
And the question is, please can I ask Kemo if there are any RSI invalidations on the cycle for Bitcoin getting crazy close to a 2021 second pump levels on the weekly and monthly? Any comments on that?
Weekly, monthly on Bitcoin.
Yep, with the RSI.
We'll get to that in a second. Just timing this out for a potential top, and you might like this. If we do have this, this being an A, B, and then the timing comes up to 59 or so, would be on October 7th. Somewhere to look for timing if those legs repeat in time, or we go blow off and go really crazy.
Wait, let me see. October 7th. Somewhere
between the 5th and the 12th.
Yeah, From a daily cycle count, like that it'd be a bit of a longer cycle, so maybe, but
it's the last part of the cycle before major downside. So
yeah, and then after that
grab
we'd be
that
targeting a weekly cycle low, late October, early November, so maybe.
late, yeah, right around the elections.
Mm-hmm.
Get a cycle low bounce and then distribution.
Yep.
And then bad things coming potentially. All right, we're talking 2 week on Bitcoin. That question was it monthly?
It says, can I ask Kemo if there are any RSI invalidations for the cycle on Bitcoin getting crazy close to the 2021 second pump levels on the weekly and the monthly? And whilst you're talking about this, I got to run to the toilet.
That's good. Relative strength index. Relative. There we go. Turn on the RSI. All right, so there's an RSI. Let's get this thing. I don't know what this is. Well, you're in a downtrend on the RSI. If there are any validations, it doesn't look horrible just yet on the RSI. Well, on a monthly chart, I should say that. Depends on your time frame and what you're trading. So if I was to look just at this RSI in relationship to how it acted before, take a screenshot and I'll draw on this, show you what I'm talking about. Hopefully I'm full screen. And you can see this topping pattern. We were in oversold, came back down below the overbought area, back tested it on a higher high. So if we went into oversold here, went back inside of here to the same level, back test the overbought section on a potential higher high, that would look like almost picture perfect for me to trade the RSI. And then of course we've got this downtrending resistance that it seems to be hitting repeatedly. So trend-based fib extensions, or the measurements here, from that RSI to that, you have hidden bullish divergence. So that leg appears to match that leg here. And you see the RSI making lower lows and lower highs overall on a monthly. So there's a lower high and a lower low, giving you the divergence between this leg and this leg. So those look like they match pretty well. And now we're up into potentially a completion of a major part of Bitcoin. Strong. Not overly bearish. I mean, this chart always looks really good on the larger time frames. It's still in an uptrend. So the opportunity being a close here, closed here. If we do pop up, grab liquidity, we might get a monthly close up there maybe, and then measure the distance from that to that and project from this low, probably get you around here, maybe around 25,000 to 30,000 area. That would be an area to buy. And that's just working on the monthly trend. You're looking for highs, a higher high, higher low, and continuation of the trend. So what could be happening here based on the RSI is we are currently starting a fifth wave. And this is actually just wave one of that fifth wave. Imagine in the longer term of Bitcoin, it's not really on this chart from its inception, ABC pattern for wave four. That's kind of the way the monthly RSI looks. I've been looking at it like this. That's your wave four. So, so down below we have some kind of wave one. This should be a wave two. There's your three. There's wave four. And we're working on a wave five. How high it goes, nobody knows. And currently, this could be the start of wave five, where you start with A 1, 2, that's your wave 3, 4 is in, and you do a little wave 5. Something like that up to 100K. And that becomes wave 1 of the 5th wave. This is like super cycle bullish pattern though. 1, and then wave 2 comes down, to grab all this local liquidity. Some kind of reason why the market's months off. And then this goes up price discovery. And there's your actual bull market that you want to look for. If that is the case, then this price is going higher than most expect, except for maybe Michael Saylor. He kind of is looking at really high targets, but say we get 100K-ish back test, grab that liquidity at around 20K. Targeting 4.3 million. And right there you got just over 500,000 for a wave 3. And that's just at a glance, Elliot Wave counting after the next crisis. So wave 1, 2, there's 3-ish. And then wave 4 goes sideways for an extended period, then your money's gone. Your money collapses. And a loaf of bread costs you $100. But at least your Bitcoin is going to be worth $5 million.
So it's all worth it.
A house is going to cost a regular house is going to cost you $5 million anyway.
Yeah.
So currently we're at, for a reasonable house right now, what are we at? 4, 5, 6 Bitcoin for a really nice house.
Yep.
And in the future it'll be, $5 million Bitcoin, and you're looking at 1 Bitcoin for 1 house.
Yeah.
So your nice houses that are costing like $500,000 are 10 times more expensive as though your Bitcoin, which means your money is worth 10 times less. So you missed it, Camel. There's a great thing on the monthly RSI, which check the comments to make sure that was adequate.
Yeah, he says you nailed it. What did I miss?
Yeah,
Can you give me the cliff notes?
Yeah, definitely cliff notes. I was comparing 2021, how we went into oversold, broke back inside the purple range, back tested the oversold area, kind of doing the same thing now. We went into oversold, broke back inside, now we got the back test on a higher high.
Okay, yeah.
And that would mimic perfectly getting this trend line, break above that, and pandemonium. Most likely you're going at 100 RSI, and this thing is just rocket ship, just hyperinflation is very, very quick.
Yep.
Which historically, hyperinflation comes fast. Like, you don't have time to react.
Yep.
It's overnight. So like the equivalent for the United States would be China dumps all of its treasuries over the weekend, and just, your bond market is toast, which means your currency doesn't have anything backing it.
Yep.
It's horrendous. But for now, I'd be looking at a back test of the oversold area on a higher high. That gives you perfect divergence. That would be a sell into, the wave 1, 2, 3, 4, 5. Because I was looking at this wave 3, this is the completion of wave 4, and my wave 5 target is, on a linear scale, it's 333 before it stopped, but on a long scale, it becomes in the middle. We'll see. Adoption phase could end up happening like that, where there's a race to get Bitcoin, and BlackRock is currently trying to position themselves for it. It's a plausible scenario.
Wild times.
It could be. Gold is looking good. Hey,
yep.
This chart on Bitcoin is not looking bad. We did close a higher high, and especially if we get like a higher high close at like 100, your higher low is going to come in somewhere around 30,000, somewhere around there, which is, for a short period of time, is acceptable for the miners. Ideal.
Yeah, I think they can manage that.
BlackRock
for a short period of time.
Yeah, they can. For a couple months, it's okay. Not ideal, but it's okay.
Anthony says thank
what
you.
Else? Yeah. Welcome.
Wow. Where do we go now, Kemo? Where do we go?
The allegory of the cave. Well, we were supposed to touch on
Oh
that
yeah, do you want to talk about that?
Briefly, yeah, we'll get into that for the next 20 minutes or so. Do you want to give a brief explanation of the allegory of the cave?
Yeah, shall I pull it up on Wikipedia or something?
Yeah, or just an image of it would kind of give the
All right,
idea.
all right. Let me pull it up.
That's Plato. Yeah, Plato had the I don't know if it was a story, but it's the allegory of the cave, where the cave dwellers had a fire in the cave to keep themselves warm and to cook on or whatever, and they saw shadows that were broadcast onto the walls of the cave, and they thought that these were the beings, that the shadows were the actual beings, and they had no idea that there were beings or people behind them that were casting these shadows because they were too focused on the wall, and their entire world became what was on that wall. Kind of like people now with their cell phones, where people just glance into their cell phone and that becomes their world
Yeah.
because they're escaping reality.
So I've got the image on screen.
And then the ones that are one of the cave dwellers.
One of these guys
decides to venture out of the cave and sees a whole new world. It's a funny story, but he sees a whole new world, 3D things that they thought were 2D images on their walls. Where they saw the sun, they saw flowers, they saw trees, they saw other people, and it was like, wow, what a new world. And then that person comes back into the cave to explain it to his friends that were still in the cave, and trying to explain what he saw in 3 dimensions, explain it to people that only watched 2 dimensions, didn't make sense to them, and it was seen as like blasphemy. So they wanted to kill him for saying these things. They thought he was crazy, and they just wanted to kill him. So, so the moral of the story is, don't kill the messenger, I guess. Am I getting that about right?
Well, or is it that the moral of the story is that even if one goes on a journey above the cave to find out what the world really looks like, even when you try to explain it to cave dwellers that are used to seeing their entire paradigm as a 2D shadow projected onto a wall, they won't want to accept the truth and they won't be ready for it. Instead, they would rather turn to persecution of anything they don't agree with.
Yeah, well put. You're so much more articulate than I am.
Thank you. I've got the image on the screen so people can hopefully see. But just to quickly summarize, these are the cave dwellers here. I know you can't see this, Kemo, but there's an image here. These are the cave dwellers. They spend their whole life looking at the shadows. Like Kemo said, one of them eventually leaves the cave, as you can see here. He figures out that there's a whole new world and this shadow on the wall isn't their entire existence. And then when he comes back to tell them of the beauty of nature and that there's more to these 2D images, they, as expected, turn to persecution, and they want to kill him. They don't want to believe him. They don't want to see the outside of the cave or any of the beauty that lies beyond it. So yeah, that is the allegory of the cave. And Kemo, how does it transfer to life and trading?
Well, we were talking about how other influencers and anybody else on Twitter, really, or social media, it turns into something like that. Having experienced trading markets and seeing what they do, and seeing things that other people aren't necessarily looking at, I mean, like, this is the way that it's happened. Like, I've seen how this happens and how it plays out, and you immediately get persecuted. Like, if you show somebody the chart of XRP, and it says, dude, it's been going sideways for 7 years, and their paradigm says, well, that just means that it's undervalued and it's going to play catch up, which, yeah, that's a great trade. But in the meantime, it can go sideways for another 5. So you'd get persecuted and shunned or blocked for saying, even mentioning the fact that it could go sideways for another 5 years, or calling bottoms. I think we experienced that quite a bit in 2022, where the S&P 500 to me looked like this is going to probably take the highs because sentiment was so bearish, And anybody that was posting, this is a reaccumulation, look for new highs to come, within the next 9 months to 12 months, you get persecuted instantly. I don't know if you had the same experience.
Yeah, and by saying that we might make an all-time high before the halving, right? It was, no, we've never done that before. We've never seen that before, so therefore it's impossible.
That is not on my cave wall in my two-dimensional world. Exactly. No, Bitcoin always goes up. Michael Saylor said so. That's all that's in our world. Until it doesn't, we're most likely coming to an area of in time here where we're potentially going to see some things that we've never seen before.
Yep.
And potentially some things that we never thought would happen come to pass.
Yep.
We think of the United States, and the thought that comes to my mind is in the name. It's united. You're a United States of America. It just exudes strength and prosperity and togetherness. What if that all separates? No, that can't happen. We've always lived in a United States. Like, well, maybe we're going into the divided states, and it'll be named something totally different. There's some coalitions that are saying, we want to secede from the Union. They're probably going to be met with some retaliation, but the trades, like the markets, the way they look, it looks like something could be coming that's very, very big. It's not necessarily saying it's going to happen, but the setup is there, and we have the invalidation.
Yep.
For the ideas, I guess.
Yeah, and I also think that a lot of what you see online, whether it's Twitter or YouTube or whatever, I think a lot of these influencers or trader guys, whatever, are selling a lifestyle more than they are giving their ideas on markets. And what I mean by this is, a lot of people have been promised if you buy whatever this altcoin is, then you're going to have, quote, generational wealth, right? And you're going to be able to use other people as exit liquidity. And so therefore, a lot of people have their shadow on the cave wall that they're staring at all the time is, like I said, you're going to have generational wealth. You're going to be able to stake this stuff. You're going to be able to go into JP Morgan and get foot rubs because you're going to be a multi-billionaire and all of this kind of thing. And a lot of people have bought into this as an idea that if they just buy whatever this altcoin is in size or even in small size, that, all they got to do is ride the waves and hold it out. And before too long, they are going to end up, being in a position that the 1% of the 1% are in right now. And so I think a lot of the time people get really defensive when you say, well, actually charts don't always behave this way, or maybe it's not realistic to have, whatever the altcoin is reach 200 trillion market cap. But again, I think it's important to differentiate between whether or not you are trading something based on a chart or whether or not you're investing on it based on fundamentals versus whether some guy on the internet just promised you generational wealth and that sounds really cool to you, right? To have 5 Lambos and a harem of women, as I often say lately. And it's important not to buy into that lifestyle, right? It's important to understand that this is a financial market. This is a business. It's not a place for games and daydreaming and wishing and hoping that things are going to work out one day.
Yeah. So that the dreams and the hopes and the wishing is the influencers that are projecting that image on the cave wall. And I think Camel's in a great position of seeing this on his end, being, having quite a few subs on YouTube. You get solicited by companies to promote their stuff, and you see it on the back end.
Yep.
And you definitely mentioned that before. And it's like coming back to tell the story of, this is what it's really like out there. It's actually pretty cutthroat. And they're just after your liquidity.
Yep.
In
100%.
all senses, everyone.
Yep.
And we're sold this idea that, this particular country is going to do well, or this particular stock is going to do well. And it's all fugazi. It's all propped up for you to see. But as soon as you start opening your eyes to maybe the governments don't have your best intentions at heart, maybe the Federal Reserve doesn't care about your 401k, then you come back and tell everybody else that and be like, oh, you're just stupid, blocked, get persecuted.
Yep.
Until conspiracy theory turns into conspiracy truth. And it's like, wow, they did the same thing they did in 2008 or 1929. The Federal Reserve just keeps rates high until there are problems.
Yep.
Historically, that's the only way we've ever seen it, really, is they keep pushing until it breaks. And that's what they want. They want the break. And it allows them to bring in liquidity to invest in endeavors that they want to see work out well. Like AI, like there's an AI bubble. Everybody sees it. So if that crashes and retraces, maybe you have 4 or 5 AI companies that have a shot. And after this crash that could potentially be coming here, the governments / Federal Reserve, or powers that be, if you will, have that liquidity to start pumping into the direction they want to bring your country or the world to parity. Am I going?
I'm
You're still there,
speechless.
CPS.
Yeah, I am. I'm speechless. I'm never speechless.
I thought you were reading comments.
Yeah. I'm half reading. I'm glancing at the comments. I try not to pay attention to the comments too much, because I just find it way too distracting.
The original idea of the allegory of the cave was when I was personally seeing all the influencers peddling, like they don't know how to read a chart properly. They kind of think they do, which ends up being really dangerous. So they have their ideas, and they promote this idea that up only, bro, and it's not necessarily the case. Once you have an experience in markets, i.e., getting out of the cave and seeing things from a bear market perspective or a bull market perspective, having a different perspective on it, you come back and tell everybody that's been in the cave for the past year and a half, where you have up only markets, it may not be the case that you're going to go up forever. In all likelihood, you're going to have a retrace that you're not going to be ready for, and you're going to be a deer in headlights. And if we were to potentially speak to these influencers and tell them about it, they're like, "Yeah, you're a doom poster. Not hearing it. We're in a bull market. This like Bitcoin is currently just mid-cycle correction," which, yeah, totally possible, but it's likely to go get lower liquidity, I would say, sooner than people think. And the expectation of parabolic movement when people are expecting it doesn't necessarily play out the way you expect it. So, like, I'm just thinking back to the COVID-19, the chart looked really good after descending triangle, bottoming, swing failure pattern there. And then it retraced all the way back down from 14,000 back down to 3,800. A lot of people I know were offsides on that. I personally was kind of neutral on it. I was like, the chart doesn't look right. I think it was like a week before the actual plunge. Just didn't look right. I ended up actually shorting it and profiting, which I thought was stupid, but hey, it worked out. I had my invalidation, went farther than I expected. But maybe we're having something like that that's going to come to provide that liquidity that eventually gets printed. The money printer should go burr again. It just might not be as soon as people want it to have their parabola, so that they can have their exit liquidity and dump on the retail that is supposed to be coming or not.
Yep.
Not realizing that we are retail. I'm not an institution. You're not an institution. I don't think anybody listening is an institution. We are the retail.
Yep. 100%.
We are getting dumped essentially by people that have bought shitcoins 3 or 4 years ago. You've always got to think of it like people that bought Bitcoin back in 2013, 2014. They're up substantially. They're feeling really good. And they're selling off small portions of what they own. And they have fuck you money, basically.
Yep.
So they can sell and keep dumping on you. In this cycle, we're kind of late to the party, and we might be going back down for liquidity before more pumping. So there's your allegory of the cave. Join us outside of the cave as assistants.
Yeah, the cave, the allegory of the cave is so pertinent to this space because so I have a number of things to say about this. First of all, I kind of already touched on this earlier, but like a lot of these YouTubers and stuff are selling a lifestyle. They're not really selling how to trade or how to handle crypto or how to pick the right ones. They're selling a lifestyle by promising everyone that, you know, you buy this altcoin and it's going to turn $1,000 into tens of millions, and then, you know, you're going to be able to have this lifestyle. And they throw around that term generational wealth, which is always a red flag for me. And it speaks to that they're showing a shadow to their viewers and their audience. And as soon as anyone comes along and says, well, that's not really realistic, then again, they turn to persecution of anyone that doesn't agree that the shadows are the absolute. And we also kind of, you kind of alluded to it earlier, that I get approached all the time, right? Even though I've only got a relatively humble, 18K subs or whatever, I get approached almost daily from exchanges saying, hey, we'll pay you all this money to shill our exchange link, and we'll give you all these kickbacks, and every time people blow their accounts up, we'll give you bonuses and all of this crazy stuff. And then more recently, I've been approached for, hey, do you want to, be sponsored by Skillshare or VPN services and all of this kind of stuff? And again, we'll pay you like hundreds of dollars per video just to edit in a 2-minute advert or whatever. And people don't really understand that it's actually a lot easier to make money on YouTube, especially if you take the sponsorship deals and the exchange referral links. It's so much easier to make money selling that and selling a lifestyle and promising people things are going to go up than it is to actually make money trading. And it's a lot easier to just say, yeah, you click this exchange referral link. And did you know, Kemo, I did mention this one time, an exchange, one in particular, offered me a demo account and unlimited attempts to take leverage trades until I had one that was sat in tens of thousands of dollars worth of profit, which of course wasn't real money, so that I could flash those tens of thousands of pounds of profit in front of everyone and say, guys, look how much money I made. Look how easy it is. Click the exchange. So I didn't even have to risk my own capital, right? It was a fake trade, fake numbers. And this is what I think people don't... Yeah, this is what I think people don't realize is a lot of these accounts and crypto guys, they're all shilling exchange referral links. They're all telling you to click this link. They're all telling you it's really easy. And a lot of the time, it might not even be real profit that they're sat on. So yeah, there's that. And like I said, they are really selling lifestyles. They're promising people they're going to have generational wealth. And that all sounds well and good. But the reality is, it's just not how markets work. And another thing I notice is every once in a while, instead of do like the standard content that I do most days, I'll find a bunch of like on-chain data and more longer term analysis, and I'll be able to point at stuff and say, look, longer term, Bitcoin seems to be on track to these high numbers, or look at this exchange data that says the supply is dwindling, there should be a supply shock coming, and look at this on-chain metrics that say we're not even close to the top, right? So I'll post a few of these things, and all it is me just clicking on Twitter and showing bullish stuff. But if my entire video has bullish overtones and the entire theme of the video is Bitcoin's going to multiple hundreds of thousands of dollars over the long term, then the comments are full of people saying, this is fantastic content, we need more content like this, post more videos like this, absolutely great video, blah, blah, blah. And the moment I post a video like today, where I say, guys, like, I know I've been having a base case of a blow off top, but it's just not looking like the market wants to give us one right now, right? So we have to be open to pivot in if the market's going to present new data. We have to be open to not having a blow off top if we're going to roll over from here. As soon as I do that, I would think that people would respect it. They'd be like, okay, he had an idea and it's starting to look invalidated, so now we're going to move to a plan B. But instead, the comments are just full of people saying, you promised me a blow off top, Camel. Where's my blow off top? Like, you're a scammer, Camel. Like, you said blow off top, and now you're pivoting your stance. And it's like, bro, I'm trying to just stay on the right side of the trade, right? I can't control if there's going to be a blow off top or not, right? I just have an expectation, and I never promised anyone a blow off top. I said, this is my expectation. And then the moment the market proves me wrong, or the moment the market starts to look like it's going to be more a distributive top, then I try and do the right thing, come on and say, look at the chart, guys. It doesn't look like a blow off top anymore, right? It looks more like we're maybe into distribution, and maybe we're going to have to entertain not seeing that third and final angle come in. And again, obviously there are people that say, oh, thanks very much, Camel, I appreciate, like, you know, the no bias approach or whatever. But the reality is, if you're just going to focus on growing a YouTube channel, if you want more subscribers, if you want more views, then it's actually not in your interest to tell people that we're not getting a third and final angle. If anything, it would be in my interest to come in and say, guys, buy the dip. No stop loss, all in, buy the dip, third angle's coming, I promise you, we're going to build generational wealth, right? Buy this altcoin, click my exchange referral link and trade just like me. And that's how you grow a YouTube channel to the millions of subscribers, right? That's how you actually build a channel with Steam. And yet when you come out and do the right things, people just start calling you a scammer or telling you you're flip-flop finance or whatever else. So it really is, you know, the allegory of the cave is so perfect, because when you go outside the cave,
really,
when you try to show what a real trader looks like, and when you try to show the importance of managing risk and of being open to all possible outcomes, mostly what you get is the people inside the cave telling you, hey man, like, you're a scammer, or you're flip-flop finance, or where's my generational wealth? You promised me a left translated cycle, right? All of this kind of stuff. And yeah, it is what it is. But it's crazy how that allegory of the cave really, really, really does apply to this space particularly.
it's almost like people want to be abused. Like, what do you mean? You keep telling me what's not true. Just ignorance is bliss type stuff until you get wrecked. And that's crazy that people would flip like that. I personally saw today's video. I'm like, yes, this is the best video you've made in about a month, because it's like speaking real truth. I mean, as a trader looking at another trader, I was like, yes, I hope people pick up on this and realize what you're actually saying. You're not necessarily saying game over. You're saying, hey, pay attention. You know,
Yep.
there's a potential game over, and people would, you know, start attacking you for that, for coming back into the cave.
Yeah, yeah.
Oh man, I've been outside the cave, and it's glorious and wonderful, guys. uh, that's crazy though.
Yep. The world is
But yeah,
better in
the
3D.
shilling. It's almost like you're incentivized from these promoters and stuff when they send you referral links or whatever. It's almost like you're incentivized to screw over your followers.
You are, yeah.
With to building your. I mean, you're using your name as a brand, and you're selling your name away. You're selling your soul online to make profits.
Do you know what? Some of them are so blatantly criminal. It surprises me they haven't been in trouble. Like, some people will literally message me or email me and say, "Hey, we've got this altcoin or this meme coin. We'll give you X amount of them. You have to pump it and shill it to your followers, and then we'll give you the rug pull date, and you can get out a couple of weeks before we pull the rug." And I'm like, they're not even trying to hide it. They're not even pretending. They're not even pretending that this isn't a rug pull or some kind of scam. They just message people and go, "Hey man, do you want a bunch of these altcoins? And yeah, like, we'll give you the date to pull out, and then yeah, we'll rug your followers shortly thereafter." And I'm like, bro, like, like, how do you sleep at night? What the?
Yeah, everybody's trying to make money off of everybody else, and this kind of speaks to like end of times type of thing, where like our own governments, they're basically doing that. They're cannibalizing the economy, extracting as much wealth as they can before it all implodes. Is kind of the way it looks. And the people, the real shark type of people, or uh, people that don't have moral values, they're right on with it. They're stabbing the guy right next to them and be like, "Give me your loaf of bread." And this could get worse. Like, if we enter into like civil unrest, like we've kind of been talking about next year, where we'll have an uprising in civil unrest, it could get really bad, and people that have morals will get taken advantage of pretty easily.
Mm-hmm.
And you have people that are unscrupulous, like you're talking about. They'll be willing and waiting to take advantage of everybody they possibly can, and they won't care. People don't care about other people, and it's getting worse, I think. I mean, our government doesn't care about its own citizens. You can tell by the way they're, you know, funding the wars and funneling the money back to themselves. They don't care. If people die, people die. As long as their bankroll is getting fatter, they seem to not care. That's
Yeah.
my opinion.
Yep. Yeah, I think they they don't even view people as people or humans anymore. They view them in the same way that like we would view an ant, like an ants or something, right? Like if you see some ants, you're not going to go out of your way to kill them or step on them. But the moment that they build an ant's nest near your home, then you have no problem with like tipping poison on the nest and exterminating them and getting them out of the way right away, right? You have no problem with it. Like if you see one out in the street, you're not going to go out of your way to harm it. But that's how I think they see us. I think that's how they look at everyone else. They just think, you know, they're there, and the moment we're in their way, they just don't care anymore, right?
Yeah. Stay out of their way. Stay out of the way, and that also brings us into a potential future of, like, we think that we can extract wealth from markets or wherever, and at the drop of a hat, at any point, the government can change the rules, and they've done so in the past. We've seen it happen. A blatant example was the confiscation of gold, where they bought everybody's gold back in the 1930s. They changed the rules there. They gave you their shitcoin in exchange for real bars of gold. And as soon as you bought their shitcoins, they immediately marked up their gold and said, you're going to need twice as much of those shitcoins to get your gold back. And it's like changing the rules right away. Mm-hmm. Other exchanges in other parts of the world. I remember hearing, I think it was last year, I think it was silver, or maybe it was palladium or something like that. One of the precious metals was getting traded, and this was in Asia somewhere, I think. And somebody lost a lot of money, like 10 or 20 billion dollars. And that dude was able to somehow call and get the exchange to reset the day and say that trading day was a fluke, that never happened. We're going to start back at the same price we were yesterday morning and trade on for the day. And this will be the real trading day. Well, the same exact thing happened. And they say, whoa, whoa, whoa. Okay, this is not the way it was supposed to go. We're going to try one more time. Mm-hmm. And they reset the day like 3 times or something like that, just so this billionaire wouldn't lose like $20 billion.
Yep.
They changed the rules on you.
Didn't we see this with copper or nickel, like not that long ago? I think it was copper, like a few years back.
Yeah, that's probably the one I'm talking about. It might have been nickel. I don't.
Copper or nickel. I think it was one of those. Yeah, you're right. And it was the London Metal Exchange, right? The LME.
Yeah.
Yeah.
You just reset it. Somebody made a lot of money though.
Yeah, and they didn't pay out any of the derivatives traders. They just said nope. That was our mistake.
That was fake. Now we're going to start trading for real.
Yeah.
It happened to somebody I actually know personally with crypto. They made a phenomenal trade on some shitcoin, and I think his trade ended up being like $5 or $6 million. And the exchange said, no, that was fake. We're not paying that out. That was a fluke. We're resetting it. You actually lost $100 on that trade.
No way.
It's like, my account balance said $6 million. Where's my $6 million? So yeah, that was quite a bit to recover from.
Absolutely crazy.
Unscrupulous, and they changed the rules because they can profit from you.
Yeah.
We don't have much protect ourselves with our stop losses. Get out of the market when it's time to get out.
I'm just putting your Twitter and YouTube into the comments so people can follow you. Some people are asking how they follow you. There's the Twitter link, guys. And
yeah, on my Twitter page, I keep it clean. I only have the articles that I wrote last year to kind of mentally prepare for upcoming events that I see potentially coming that are very likely. So I keep my Twitter page very clean, and I clutter up Camel's comment section in his Twitter.
With waffle emojis.
with whatever I have to say on Twitter, I just post it under Camel's.
Oh dear.
So bad.
How
need to get another Twitter.
Just looking. How long have we been on for? Can anyone see?
We're probably at 2 hours. Shall we call it then?
I think it's over 2 hours, you know.
Yeah, I'm sorry. There's some people that are not going to like this one.
Yeah, yeah. People are saying it's over
There's
2
some
hours.
people that love it. There's some people that love it, but there's some people like, oh, that's 2 hours. I'm not watching all that.
Yeah,
Yeah,
so
it's just a conversation. Either you like it or you don't. And
I did one with Tony the Bull, and I think it was only about 45 minutes, and I had at least a couple of comments from people saying 45 minutes. I ain't got time for this. I was like, what? Oh
I
dear.
don't know. I like listening to the podcast from Creative Precious Metals on the Watt podcast. Those things run 2 hours, and oh, what great conversations you guys had on there. And I actually was on there as well, so check me out on there, where I was discussing things with CPM on the Watt podcast. I had my premiere there, so that's pretty cool.
Yeah, that was a great one. I watched that one. Yeah, those conversations are really fun. I think we're going to be on a break for a couple of weeks because CPM's going on holiday this weekend for 2 weeks.
And then, he's so lazy. Come on.
And then they should be resuming at the end of the month, I think. So yeah.
So like when you Cobra Stacker got busy there, replacing you, and I was going to jump on and just start replacing the two swigs. And now that CPM is busy on holiday, hey Camel, you wanna replace Creative Precious Metals with the Walt podcast?
Yeah, if you wanna do it, bro, I'd love to. I'd absolutely love to. I'll speak to CPM and get him to give me the access to the channel or something. I think I already have access. Like maybe I got upload privileges or something like that. But yeah, we can sort that out. If you're down, I'll be down for that for sure. And that'll keep the algorithm satisfied whilst he's on holiday as well. So
yeah. Another guest to jump in there. We won't call it two swigs and a steak.
Wait, say that bit again. I think your mic cut out.
We're not going to call it two swigs and a cigs. That name is sacred. We're not playing with that.
We'll call it chemotherapy or something.
Well, no, my solo stuff is chemotherapy, so we'll think of something.
We'll call it camel and chemo.
We'll call it camel Sabi.
Yeah, that'll do. Yeah, great, that'll do.
That should be what this one's called, camel Sabi.
Yeah. We'll figure it out, I'm sure. But yeah, if you're down for that, I'll speak to CPM, and I'm sure he won't mind. I'm sure he'll be happy, in fact.
Something we're gonna do. That's all good.
Well,
all right, let's call it a day.
Yeah, Kemo, thank you for your time. It's great talking to you as always. I've put the links to Kemo's Twitter and YouTube in the comments, guys, and I'll put them in the description to this video as well. Other than that, thank you all for being here. Have a great weekend. Deep dive tomorrow. And Kemo, brother, I'll speak soon, I'm sure.
Yeah, keep the discussion going. You guys have questions, leave them in the comments section. Leave them on Twitter. I'll try to respond, and as will Camel. We're all just putting our minds together to try to figure these things out. So, yeah, keep the conversation going.
Will do. Okay, thanks, brother. Speak soon.
All. Yeah, will do.
Okay, cheers, bro. Bye.